Hey everyone, welcome back to Corporate Decoder. Today we're diving into BOK Financial's latest annual report, a document so detailed it could probably cure insomnia or maybe reveal some hidden financial gems. Let's see. First, let's tackle some jargon because, let's be honest, these reports love their acronyms. When they mention BHCA, they're talking about the Bank Holding Company Act, the rules governing companies that own banks. CACL is the current expected credit losses, basically how much money they think they might lose on loans. Knowing these will help us decode everything else. Alright, so B2 Financial is a big player reporting total assets of $50 billion. They're a financial holding company, which means they own a bunch of different financial businesses, mainly operating in Oklahoma, Texas, and some other surrounding states. The business is split into three main parts. Commercial banking deals with businesses offering loans and managing their cash. Consumer banking takes care of regular folks like us with retail banking and mortgages, and wealth management focuses on the high-end stuff, managing investments for wealthy clients. Like any business, they face a lot of competition. They're up against big national banks, smaller regional players, credit unions, and even those new financial technology companies, those fintechs, all fighting for your money. Here's where the report talks about their employees. They have just over 5,000 of them across 8 states, and none of them are in a union. The company says it values community involvement and tries to create a good workplace. Now for the boring but important part, regulations. BOK Financial, like all banks, is heavily regulated by the government, the Federal Reserve, the FDIC, the OCC, the CFPB. It's alphabet soup. These regulations are there to keep the banking system safe and protect consumers, but they also limit what the company can do and how much profit they can make. The Dodd-Frank Act, passed after the 2008 financial crisis, has a lot of these rules. Some of the standards are tougher for bigger banks. BOK Financial is also subject to consumer protection laws, making sure they treat customers fairly. The Community Reinvestment Act, or CRA, requires banks to lend money in the communities where they take deposits, especially to lower income folks. This is something regulators consider when the bank wants to grow or merge with another bank. Most of their deposits are insured by the FDIC, so if the bank fails, you're covered up to a certain amount. Banks pay premiums to the FDIC to keep this insurance fund healthy. The FDIC recently implemented a special assessment on certain banks to recover costs from recent bank failures, which impacts BOK Financial. The Federal Reserve expects the parent company, BOK Financial, to support its subsidiary bank if it runs into trouble. This is known as the source of strength doctrine, so that BOK Financial may be required to prop up the bank even when they don't have resources to. The Volcker Rule, a part of the Dodd-Frank Act, limits banks from making risky bets with their own money. This doesn't affect BOK Financial too much, as most of their trading is for customers. The company's success also depends on what's happening in the overall economy. They note some good news like lower interest rates and a housing market that showed some signs of recovery, but also some worries like rising unemployment and the Russia-Ukraine and Israel-Hamas conflicts. Cybersecurity is a big deal, so BOK Financial has a whole strategy to deal with it. This includes protecting their systems, training employees, and working with other organizations to share information about threats. They recognize a few key risks, including deterioration of asset quality, general economic conditions, inability to control expenses, data breaches, and many more. They recognize that climate change is a potential risk as well. Now, some details about their stock. It trades on the NASDAQ under the ticker symbol BOKF. They give the high and low prices for each quarter of the year, showing how the stock has performed. The company's stock is held mostly by one person who owns about 60%. This means that this person can make a lot of the key decisions. This section compares BOK Financial's stock performance to some other indexes like the NASDAQ Composite and the KBW Regional Banking Index. It shows how much your investment would have grown if you put $100 in each of those things back in 2019. Alright, time for the main event, the numbers. For the year, they made a net income of $523.6 million. They also mentioned pre-provision net revenue, which is basically their profit before setting aside money for potential loan losses. That number was $684.7 million, which is a decrease from last year. Their fees and commissions revenue was strong at $810 million, and mortgage banking revenue was up because they made more mortgage loans this year. However, brokerage and trading revenue decreased a bit. They got a nice boost from selling some Visa shares they received. They also sold their insurance business last year, which gave them a one-time gain, and they have experienced losses on securities they've sold. They set aside $18 million as provision for credit losses, that is, losses on their loans. They did not do that in the fourth quarter because their loans are performing well. Their total allowance for credit losses is $332 million, which is how much they expect to lose in total. The good news is that very few of their borrowers aren't making payments right now, which means that BOK Financial doesn't seem to be taking big risks. Their loan balances increased by $1 billion, mostly in commercial loans and loans to individuals. People are borrowing money. Their capital ratios, which measure their financial strength, are all above the required minimums. Tangible common equity, a non-GAAP measure, was 9.17%. The company emphasizes that they're very careful in their money management and make sure to follow all capital requirements for dividend payouts. A big thing for them is mortgage servicing rights, or MSRs. These are assets that can change a lot in value depending on interest rates. They try to hedge or protect themselves from this risk, but it's not always perfect and it can impact their profits. They note that they are based in some states like Oklahoma, Texas, and Colorado that rely on the energy sector. They recognize that regulatory impacts on the energy industry could shrink the industry and affect the general economic conditions within our footprint. They use financial models to make decisions, but those models aren't perfect. If the models are wrong, it could hurt their profits. If their credit rating gets downgraded, it could make it more expensive for them to borrow money and limit their business. A lot of the report talks about the financial side, but here's a quick look at what we have to say. Cybersecurity is definitely a threat and they're working to protect themselves, but there's no guarantee they'll be successful and a breach could cost them a lot. They also note that they aren't a big player in the derivatives market swaps, so they are exempt from the definition of and registration as a swap dealer. So what does this all mean? Overall, BOK Financial had a decent year, but with some mixed results. The economy played a role and they had to manage things like interest rate changes and potential loan losses. The company continues to invest in talent and to expand the business. The company also lays out the risks in detail, which are important if you're thinking about investing. One big one is that a single shareholder controls most of the stock, so they have a lot of power. There's also the risk of economic factors, such as prolonged periods of inflation or global health crisis, which could affect their customers' ability to repay loans and affect their profitability. So what's our take on BOK Financial? They're a well-established bank with a strong presence in their core markets. Their strategic focus on liquidity and capital management looks solid. However, a significant portion of the company revenue seems to depend on trading activities, mortgage loan production, and oil prices, which can be volatile. That said, the company has continued to try to diversify its customer base into surrounding sectors. Based on their current earnings and growth potential, a reasonable price range for BOK Financial stock would be somewhere between $100 and $120. If you're after dividends, the dividend payout ratio seems promising at around the 27% minus 28% range. That said, the company is subjected to external risks that might heavily affect their financial conditions, such as global health crisis, prolonged geopolitical conflicts, as well as climate-related disasters. Thanks for watching. If you found this corporate decoder breakdown helpful, be sure to subscribe for more deep dives into the world of finance.